investors, and welcome to your Stock Sense Morning Brief, your daily pulse on the Pakistan Stock Exchange. It's November 6th, 2025, and we've got a lot to unpack from yesterday's trading session and the broader economic landscape. Let's dive straight into the market performance. The benchmark KSE-100 index continued its downward trend, closing yesterday at around 159,580 points. This marks a significant drop of about 1,700 points, or roughly 1.1% from its previous close. Looking back at Monday's session, the KSE-100 had already shed about 1,520 points, or nearly 1%, settling around 161,280. So, we're seeing a sustained negative momentum over the past couple of days. Despite this decline, trading activity on the main board was notably robust. We saw a substantial volume of approximately 860 million shares changing hands, with a total traded value nearing 35 billion rupees. This is a considerable increase in participation compared to Tuesday, which saw about 320 million shares traded within the KSE-100 index. On the main board, decliners significantly outnumbered advancers, with 278 stocks falling, 158 gaining, and 45 remaining unchanged. Now, let's turn our attention to the sectors that had the most impact on the market. We observed some distinct trends. The glass and ceramic sector, for instance, exerted a negative pull on the market, contributing to the overall decline. Similarly, the automotive assembler sector also registered a negative impact, reflecting broader pressures. On a more positive note, the refinery sector showed resilience, providing a positive contribution to the market, which is encouraging to see amidst the general downturn. Moving on to some important corporate announcements for today, November 6th. Several companies have board meetings scheduled. Mandaviwala Mazar Plastic Industries and Hira Textile Mills Limited will be considering their annual accounts for the year ended June 30th, 2025. Sadiqson's Tin Plate Limited has two meetings, one for its first quarterly accounts for the period ended September 30th, 2025, and another for its annual accounts for June 30th, 2025. Additionally, First National Equities Limited will be holding a board meeting to consider matters other than financial results. Investors should certainly keep an eye on these developments. Meanwhile, for those looking at distributions, today marks the last day of entitlement for several companies. If you wish to be eligible for these distributions, you need to purchase shares by the end of today's session. This includes Rafhan Maize Products Company Limited, which announced a 1,300% interim distribution. Ghani Glass Limited has a 5% interim distribution. Oil and Gas Development Company Limited is offering a 35% interim distribution, and Ghani Value Glass Limited has a 10% interim distribution. So, if these are on your radar, make sure to act today. In macro developments, we've had a mixed bag of economic news. On a positive front, the finance minister has confirmed a staff-level agreement with the International Monetary Fund for its second loan review, with board approval expected in early December. This signals continued external financial support, which is a significant boost for macroeconomic stability and investor confidence. Furthermore, the State Bank of Pakistan governor is set to actively push banks to increase financing to the private sector, particularly in priority areas like housing, electric vehicles, and agriculture. This enhanced credit availability could stimulate business expansion and potentially lead to higher corporate earnings. We also saw some positive news from the cement sector, which reported a 56% jump in after-tax earnings for the first quarter of fiscal year 2026, driven by increased sales and exports, signaling a recovery in demand. And in a boost for local manufacturing and the digital economy, Google has launched its first Chromebook assembly line in Pakistan, which could create jobs and strengthen the technology supply chain. However, there are also some headwinds. We're seeing core inflation reversing its downtrend, with headline CPI creeping up again. This could put pressure on the state bank to maintain or even raise interest rates, impacting borrowing costs and dampening economic activity. The era of negative quarterly tariff adjustments for electricity has ended, with an impending positive adjustment of 8 billion rupees for the first quarter of fiscal year 2026, which means higher electricity costs for businesses and consumers. On the investment front, Qatar's Al Thani Group has signaled its intent to divest its stake in the Port Qasim coal-fired power plant, highlighting Pakistan's ongoing struggle with declining foreign direct investment and eroding investor confidence. The large-scale manufacturing sector also continues to show stagnation over the last 6 years, indicating a lack of industrial growth. Lastly, the imminent tabling of the 27th constitutional amendment amidst strong opposition and concerns over provincial autonomy introduces significant political uncertainty, which can deter investment. Looking at institutional flows from yesterday, November 5th, we observed that foreign institutional portfolio investors, or FIP, were net sellers, divesting about $2.7 million from the market. This selling was largely driven by foreign corporates. On the other hand, local institutional portfolio investors, or LIP, were net buyers, injecting roughly $2.7 million. Delving deeper into the local landscape, individuals were significant net buyers, adding about $10.6 million, and banks and DFIs also bought a net $2.1 million. However, mutual funds were net sellers, offloading around $9.3 million. Overall, we're seeing foreign entities as net sellers, with local individual investors and banks largely absorbing that selling pressure. My take on the current situation is that the market is navigating a complex environment. On one hand, the confirmation of the IMF deal and the SBP's push for private sector financing offer a degree of stability and potential for growth. Positive developments in the cement and local tech manufacturing sectors also provide some bright spots. However, the rising inflation, increased power costs, and concerns over foreign direct investment, coupled with brewing political uncertainty around the 27th constitutional amendment, are clearly weighing on investor sentiment. The significant increase in trading volume despite the sharp market drop suggests active participation from various segments, possibly indicating both opportunistic buying on dips and profit-taking amidst the uncertainty. Investors should remain cautious and keep a close watch on both economic indicators and political development in the coming days. And that wraps up your Stock Sense Morning Brief for today. Thank you for tuning in. Don't forget to like, share, and subscribe to our channel for daily updates. Until tomorrow, trade smart and stay informed.